Good morning, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, May 9th, 2025. Ron Quaranta here with my brilliant co-host, David Brill. Josh Clayman out on assignment. The Gulfstream's taking off from Milan, I think, was the text message, David, that you and I got, but we've got lots to cover. It's great to see you, old friend. For everyone in the audience, thank you so much for joining us. If you have questions for David or I, please put them in the chat, LinkedIn Live or on X. Obviously, our usual disclaimers, please keep in mind everything we're discussing is no sort of accounting, investment, legal, or tax advice, and that our opinions expressed are our own and don't necessarily represent our collective firms. David, it's been yet another exciting week. I'm still hopeful for 125K Bitcoin. We're not there, but Bitcoin breaks 100K, ETH on the move, alts seem to be being pulled up by some of this activity and some theater in Washington, D.C., my friend. Where do we begin?
Just another week in crypto land, but I actually think we begin with the macro things that are going on and the bullishness around this potential deal that we have with the UK for trading and what tariffs are going to be. And I think that really was a catalyst, along with the idea that it looks like on Saturday, Treasury Secretary Bessent is going to be meeting with his Chinese counterpart. And I think concrete signs that the tariff situation is being addressed, especially with China, I think really emboldened people on the TradFi side. And I think on our crypto side, you got, obviously some bullishness. I think there was huge short liquidations in ETH. And then you also had the Pectra upgrade. And I think between the two of those were really bullish things for ETH, which we've all bemoaned how oversold it is. And it's sort of been beaten up on, and it's had its day in the sun the last few days.
David, I'll get to my contrarian perspective with you on ETH at some point later in the broadcast. But you bring up the tariffs, and it's something we've been talking about for a long time. And I wanted to weigh in on that a little bit. And the politics of it aside, it's obviously become clear, however ham-handed it is, that these are negotiating tactics, whatever they may be, and 145% on China down to 80 sounds good. These are really off-the-cuff kind of strategic things that are happening. And to me, it's the work that a Bessent will be doing, for example, and what the final frameworks look like. But what I've taken out of that, David, is the histrionics aside. I am looking at the charts now, I'm pleasantly surprised at how, let's call them the premier cryptos, Bitcoin, ETH, Sol, whatever it may be, have held up volatility-wise compared to how the S&P's reacted in the past, call it month, or since quote unquote in the Liberation Day, whatever that is. Cryptos seems to me to have held up better. And I wanted to know if you saw it the same way.
Yeah, I do. And I think what is a very underreported story is that there's a lot of institutional buying. Right. There's this consistent buying, consistent inflows on the ETH and the Bitcoin ETFs. IBIT consistently having, $500,000, $500 million, $1 billion days. So there's this constant buy, energy and, supply that's being bought up. And so regardless a little bit of what's been going on sort of on these macro issues, there's this interest in buying crypto. And I think we're going to find over time that some countries have been buying crypto, that some companies will announce at some point that they've been buying it. Yeah. And so that there's really this institutional uptake. And look, we still don't have the wirehouses. We're now, 16 months in? Yeah. We still don't have all the major wirehouses on board. So there's still this supply element that exists that hasn't been tapped into.
And David, the wirehouse conversation we've been having for a long time. And look, Morgan Stanley E-Trade announced, but that's not happening until the end of the year or early next year. I'm starting to lose track of when it happens. So there's that kind of halting lag to how do we get to greater exposure. But one of the other things that really struck me was, we often have the macro conversation, and I keep looking at it as this bifurcated reflection of macro trends. So we look at, you and I look at S&P, you and I look at Dow, we look at how the markets are moving, we look at the sentiment analysis, and then I look at crypto. And when you look at the sentiment data, consumer sentiment, business sentiment is really hitting kind of low points.
Mm-hmm.
So let's go contrarian, and you and I often have contrarian data points that we look at. All due respect to our friend over at CNBC, those low points mean we're potentially at the cusp of a pretty broad upswing. Broadly crypto, including the alts, broadly equities. Is inflation still the problem then?
Well, look, I mean, I think that inflation has gone down. I
Yeah.
mean, the statistics show it, but I think like oil, I mean, look, oil is under 60. I don't know what people are paying for gas, but it should be lower. Foods prices are lower. I think, real estate rental prices, I think, are lower. I think there's an issue still with higher interest rates and people, there's still a whole bunch of inventory that's stuck. But I think things are generally lower. And I think we really would have been ascending more, but for just sort of the framing of the tariffs. Like, again, I do think that there are things that need to be addressed. But I think folks, there was some uncertainty with the tariffs. And I think we'll really see in the next month or two what isn't getting imported, or, are we going to start having empty shelves and things like that?
No.
But no, I think inflation has gone lower. I think we had some really positive earnings from some of our tech companies. So I think we're really in a positive uptrend. And I think for crypto, I think we're seeing that retail has been shorting and selling crypto, and institutions have been buying crypto. But now that we've kind of broken over 100K, I think we're going to start seeing some retail folks get back in the market.
David, I'll point out to you that I've had several WSBA members and friends of ours reach out and say, when's the next wager with David? And the answer was never. I love you, buddy. It's not going to happen. But I do want to talk about the inflation stuff as well, because it ties into macro, it ties into risk on or risk off, and it ties into crypto. Politics aside, calling the Fed chair a fool and all of these horrible things that we're seeing, I don't think is additive to the conversation. That said, Bank of England cut interest rates this week. The Fed continually says we're data dependent, which means they're reactionary. Here's my concern, David. They're going to be behind the curve again. And they're not going to cut interest rates when they should have. And there's a cascading series of effects around business activity and all of the negative side effects of that. I want to hope I'm wrong. I don't think I am.
Look, we also have to remember, we want to lower 10-year and lower interest rates so we can refinance our debt cheaper. Yep. So whether the Fed agrees, I mean, obviously how they interact each other aside, whether the Fed agrees with what we're doing, what's going on right now. And yes, there is some uncertainty with the tariffs. The bottom line is we need to reduce our debt, the cost of our debt, and lowering interest rates with the data points we have would be welcome. And I think based on things in general is consistent with that. So yes, I agree with you, Ron. We're always a penny late, a dollar short, or whatever that expression is, but we're always late to the party.
Yeah.
And so I think sometimes we have to put an earlier date on the invite so that if somebody's going to be late, it actually will come at the time we want it to come.
Yeah, exactly. And, you mentioned the debt, David. You and I have this conversation a lot as well. Critically important, often overlooked for generation after generation and administration after administration. The one thing that scares me is some of the political discourse around the bonds that you're talking about. So you and I know, and a lot of people in the audience know, thank you for joining us. A lot of things are keyed off of the 10-year treasury, including mortgage rates. There's now a conversation around, let's do 50-year bonds. Let's do 100-year bonds. That conversation is also happening in Europe. And for anyone who tracks the kind of challenges around bond yields, duration's not the answer. It's just postponing an inevitable debt ceiling or debt overhang that we can't afford right now.
Yeah. And I think in our elections, I think in our just the way our elections are and the polarized nature of our politics right now, it's going to be really hard for people to make those hard choices, whether it be on Medicare, Medicaid, Social Security, or other spending. And that's why, at a big picture, and I do want to lean into crypto more, but in the big picture, I support what Doge is doing. It's not clear from the messaging if it's being done in a way consistent, that maybe a lot of us thought it would be done. But I think ultimately we do need some retrenching in government. And I think 10 or 20%, retrenching is something that I think most people would go along with. If somebody would say that, like, and that comment wouldn't be reflected by a party, people would agree with that. It's just that it's because we have this partisan politics that we get this, blowback back and forth.
Yeah, David, no, it's a good point. And then Josh is probably happy she's not here because we went super wonkish on macro stuff. But David, pulling it back to crypto, let's have that conversation. BTC over 100. We're starting to see those kind of marked gains across the board. You brought up alts a lot. There were really amazing things. I've been tracking them. You and I share text messages about it throughout the week. What's the catalyst for the alts being pulled up in some of this? Is it simply the carry along and the coattails of BTC?
I think it's a carry on the coattails of ETH, actually, because I think that the typical path was Bitcoin would go up, then Ether would go up, then the altcoins would go up, and the money would kind of rotate.
Yeah,
I think now that a lot of the altcoins are correlated with Ethereum, and so even if it's not loved, I think you sort of see rallies. Like, for instance, a lot of meme coins are associated with Ethereum. And then, a lot of other coins, L2s, will run off if Solana goes up. So I think it's really the big altcoins that drive the smaller ones to go up with it also. And it's also liquidity. And it's also Bitcoin's over 100. ETH had a 20% gain. Oh, am I too late? I've been watching, and it kept going down like, I need to get in and get some. And that whole, buyer's mentality.
So David, everyone in the audience knows I rarely disagree with you. I'm going to disagree with you here. And I need someone in the audience to tell me if I'm wrong. I'm with you on the price action. I'm going to use a phrase I don't think we've ever used on the broadcast. Ethereum's price appreciation to me is a dead cat bounce. And let me explain why. And David, tell me you disagree. Someone in the audience tell me you disagree. And there's a technical product case to it, but Pectra went through, and I don't even know the specific mechanics of a lot of the multiple EIPs associated with Pectra. I think gas fees have collapsed. Here are some of the problems, though. The L2s that build on Ethereum are eating the L1's lunch. They're taking away share from mainnet. And someone had posted, and I forgot who. I'll try to look it up and make sure it's included in the show notes, that there's been no major mainnet activity for Ethereum since 2021. That means all of the L2s building on Ethereum are cannibalizing the L1. And to me, that's not a long run model for token appreciation. And it's not a long run model for adoption. And you see this. We had a couple of conversations this week. I'm not naming firms, but building on Solana, building on Stellar, interestingly enough. And we can do a comparison there. But my investment on Ethereum, on ETH particularly, David, is much worse. And I'm looking for someone to tell me I'm wrong, and I don't see it.
Yeah, look, I think you make some great points. I think that the Ethereum should be taking some sort of fee for the L2s running off of Ethereum.
Right. Sure.
And I think in the future that's going to happen. Look, Brian, I'm not going to disagree with you. I just think where I'm going to disagree with you is supply, and that if people want access to, if people want access to crypto right now and they don't want to go on a crypto exchange, you have two ETFs mainly to buy right now. You have Bitcoin and you have ETH.
Yep.
And if ETH had staking on it as part of their ETH ETF, and you could be getting a steady 4 or 5% return for holding ETH in an ETF, I think you'd see a lot of liquidity come into the market, and the price would go up. So I kind of agree with you, and I do think structurally things do need to change. Yeah. I'm always going to be a believer in ETH until it technically doesn't work.
Yeah.
But as far as again, we don't give investment advice, but if you look at ETH and some of the other tokens, it's severely underperformed the other major tokens. So yeah, I'm agreeing with you. But
yeah, I'm looking at the year to date. Even off the lows year to date, Bitcoin's up 10%. ETH's still down 31.
Yeah.
So it's taken the beating. You bring up the staking. That's a good point. And again, a lot of what I mentioned before, David, is kind of the product outlook of Ethereum. What about the staking, though? Is that sitting still within the kind of SEC purview around whether or not those ETFs can stake? And, everyone's looking at SEC and saying, well, everything's great. They still have work to do. What's the likelihood of staking being part of the ETFs?
Look, I think it's going to happen. And in fairness to this administration, they really have 4 years worth of rulings and non-rulings to really revisit and move forward. So I think they have a lot of regulatory wood to chop on their end. So I think they've been really transparent. I certainly know that we need to be patient here. So, and also how many people, in trading and markets and Corp Fin are really crypto native to the point that when all these ETFs are being filed, and there are, certainly some novel issues that are being addressed here, how many people really have the knowledge and the experience to address them? Yeah. And if you're getting so many at one time, I mean, they need to be done in order. And so I'm willing to give some grace here because of everything that went on in the previous administration, that they need some time to review and sort of clean things up.
Yeah, David, look, you and I and several WSBA members, Josh included, met with the task force. And again, we're not lobbyists, but there was certainly a conversation around market dynamics. So I don't envy them the task. You've got a good point, David. They've got a lot of work to do, including the fact, crypto lending's popped up again. So now there's eyes on what does this mean for the markets and how do we safeguard in that context. David, I'm going to rip up the script on us, and it wasn't in the prep notes because I saw it recently, the Ripple note. The proposed settlement that SEC v. Ripple, that Ripple and SEC put in front of Judge Torres, I believe it was. I don't know if you've read it, David, but if you did, I'd love to kind of dive into it just a little bit. We'll probably cover it more deeply next week. But do you think the judge will approve it? Have you seen the high-level points on it?
I was flying yesterday, but I did see that the fine was reduced from 125 million to 50 million. And that also really, they're trying to create a construct where the judge's ruling regarding the sale of one core sale of Ripple tokens by Ripple to institutions would not be treated as securities. And I think, hopefully I got that right because I read it somewhat quickly. But the other thing is that Ripple was enjoined from selling tokens to institutional players as part of that original settlement, or the original ruling, I should say. And so the settlement really gives the government and Ripple the opportunity to appeal if Judge Torres wants to continue with that ruling. And I need to really read it further because it's really like a first take, but that's sort of what I've gotten out of it. And it's really a way to clear the path for Ripple doing an IPO also. So more to come on that as we get a chance to dive into it some more. It's also been very busy.
Yeah.
I've been involved. We have a client who's involved with a state regulator. And obviously I can't really go into it, but, again, like we've talked about, the state's getting more aggressive and in bringing more litigation claims. And so spent a lot of time yesterday, thinking about the state bringing in action and how to defend against that action for a client.
Yeah, David, it's a really good point. And shout out to, and I probably do this almost every broadcast, Michelle Gitlitz, Joseph Colo, Renato, David Pope, all WSBA members and members of our legal working group. They kind of spearhead the state's status and work. And David, the news article, and again, I need to dive into this more thoroughly, just on the reserves kind of conversation. New Hampshire passed a bill, and I think the governor signed all of that. New Hampshire would have a strategic crypto or strategic Bitcoin reserve. So a lot of pieces moving. David, if we're talking about politics, I have to confess a mistake, David. I posted to our member Slack channel several days ago that there's a House Financial Services Committee meeting on, I think it was Tuesday. It's all a blur now. It'll be really interesting. They're talking about crypto and consumers and safeguarding and all that stuff. And then that got blown up because, again, I want to leave the politics of it aside, but certainly members of the Democratic caucus and the minority leader boycotted the meeting. David, my premise is that political theater doesn't help the industry. And what do we need to do more? And did you see that? What were your thoughts?
Well, in the first instance, I think this is why Congress's ratings are at an all-time low, and why people in general, regardless of party, get fed up.
Yeah.
I think that this kind of grandstanding, and it's gone on regardless of party, because I definitely heard from some friends who were saying, oh, you're just picking on in the moment. You're not thinking about what's gone on in the past. But the bottom line is that this was a concerted effort to slow down or potentially derail the stablecoin legislation.
Yeah.
And it's just, it really, I can tell you, really frustrates a lot of people. And it frustrates them because it's really more, it's not really on the issues, it's more being obstructionist. And then
Right.
I had somebody who's, younger than me say to me, it's like, it's a little frustrating that, the minority head is 84 years old, probably doesn't really understand crypto well, and is just reading cue cards from, her staffers, and I said to this, this friend of mine, I said, look, I totally get it. But like, this is representative government, and this is who's been chosen to be the minority, speak for the minority. But I think people get frustrated when there's this grandstanding, and instead of like allowing a cloture vote and allowing for discussion on the merits and really negotiating that, you sort of like prevent that from happening. And I think that's really where people who, you know, follow what's going on in Congress generally get really disappointed. And I think, look, I think the crypto lobbies have to look in the mirror a little bit too and say, we've supported these candidates, and then we have an important vote and they're backing away.
Yeah.
And that's, I'm not criticizing anybody in the crypto lobbies because I think they've done a great job, but I think it's just time for everybody to get on board and move forward.
David, I'm with you, and I watched the majority of both. I know they were running simultaneously, so I watched the recording. The irony is, whatever your political affiliation, whatever obstruction you do or don't support, at the end of the day, the core and content of those conversations were about investor protections, which was exactly what the original meeting was scheduled to talk about anyway. So again, this kind of theater doesn't help anything, and the industry needs to continue to have that dialogue around moving this stuff forward. David, I want to make one more political point about it, and again, not the politics of party, but some of the news that came out this past week as well is the archaeology from the prior administration, prior state regulators and district attorneys. We saw the news that someone in New York, I'm assuming the DA's office, was pushing the SEC that ETH should be a security. So two questions that strike my mind, David, is one, this is terrible. It's, why didn't this come out publicly? And I'm sure whatever your political affiliation, that thought crossed your mind. The other point I have, David, is at what point do we stop doing this digging and just move forward? And again, I'd love your thoughts about that, because I get the reasons for it, but at some point, what's the value add for it?
Well, look, I think if you are on the other side of one of these litigations, and that has gone on for years, that has been extremely expensive, and I am curious to see what the FOIA request comes back with for the cost of the SEC bringing these litigations. And on the state level, look, I know there isn't necessarily preemption here because we don't have regulatory certainty, but this, folks on a state level should not be taking positions adverse to the commission on whether a commodity, whether an asset is a commodity or security. That's really like they're getting out of their lane. And it's really more sort of trying to, it just feels like it's more like trying to make a name for yourself and sort of, bring notoriety to yourself rather than, being consistent with the way, assets are classified. Like, I don't know why an AG thinks that they have the sort of, reign to sort of move forward on something that, hasn't been dealt with, on a federal level.
Yeah.
And I think people get frustrated with that. I think especially when you have individuals from, outside the US who want to do business in the US. And I'm talking about doing it legally and properly. These kind of things are impediments to investment because, without regulation on a federal level, is everybody just want to avoid New York and selling to New York customers because they feel like there's an aggressive litigation posture in New York? We've all heard that from a lot of companies that they don't want to have a nexus to New York. So I just don't think it's productive, Ron. But on the flip side, if you've been the target of one of these litigations, and you've been wondering, well, why have they been so strident and taking positions that aren't consistent with what you think they should?
Right.
You want to have all the facts. And so I might have said this in a long-winded way, but I think that has a lot to do with it.
No, well said, David. I agree with you. And look, I have this conversation with colleagues on either side of the aisle, colleagues not involved in crypto. And this isn't to advocate for some of the nefarious things we've seen. And this ties me into the most recent news article, one of the last of the fraud cases, I'm going to call it. Sentence was passed on the CEO of Celsius. We don't have to get into the details of that, but the ongoing lesson learned, and the people in crypto like you and I and so many others at the WSBA and across the industry is, fraud is fraud no matter what the market. Now let's figure out how to make this a good market and a good and safe market. I don't know if you want to dive into that too much. I think it's the last of the big judgments from a fraud perspective. I could be wrong, but 2 years ago, a news item like that, David, would have blown up the market. Now it's a matter of cleaning up the bad actors, and hopefully that's the last of it.
Yeah, look, taking money from customers, there needs to be a price of that, and there needs to be a penalty for it. And then thinking in the Celsius case, you have a double whammy of sort of self-enrichment. I think, I think the pleading document said like $48 million as well. And then a lot of customers have lost money and significant amounts of money, and there needs to be a deterrent to that.
Yep.
I think there's a difference between if you make, business decisions, that go against you versus, actively, trading against your customers, and properly enriching from your customers and making promises to customers that you're doing things that you're not. And I think that I thought that actually the sentence was light. I sort of expected a harsher sentence, but I think ultimately, whatever it ends up being, hopefully it serves as a deterrent for others who might consider doing these things in the future.
Yeah, David, fair point. We've only got a couple of minutes left. There's still so much to cover, and next week there'll be even more to cover. Sadly, schedules prevent me from being in Toronto. David, when the Gulfstream lands you in Toronto, Pearson International Airport, what will you be looking for, and what are the conversations you're anticipating?
I think there's really two main things. I think that a lot of our WSBA members and law firms who are there, will be there. And I'm really looking forward to, seeing people from Cahill and from Paul Hastings and, other firms, like Winston and Strawn. We're really going to have Ben Jenner. And so really a lot of the law firms and there's many more that I just didn't name in this one moment. So I think really having those important meetings are really helpful. I think, really seeing what people are talking about and seeing, what kind of exhibits there are, any new technology, I think that's important. And I think we'll get a real sense of and Linklaters, of course, with Josh being there. I think we'll get a real sense of the market and just sort of the sense of what people are feeling, and I think trading notes from regulatory lawyers, as well as, I'm in a unique position, sort of seeing things from law firms, seeing things from companies and, a unique position in the ecosystem. So I think it'll be really good to be around everyone and just sort of see what the mind frame is. And obviously, David, I'm sure a lot of people will be missing you not being there.
Thank you, my friend. I sadly, calendars didn't allow it, but I will ask for your report back. And the reason I say that is so many of the conversations we've been having at the WSBA, you and I often talked about the infrastructure and UX of crypto broadly. We have more and more members and more colleagues in the industry coming forward with really interesting propositions from an infrastructure perspective, from a UX perspective. I'm sure you'll see some of that. So hopefully we'll hear about that. I've been threatened with, we will call you and live stream you, Ron, and give us your credit card. I can't do either of those. But David, we're going to have to leave it there, buddy. Good to see you. Safe travels. For everyone in the audience, thank you so much for joining us. If you've got additional questions for David or I, info@wsba.co. We will be back. We'll hopefully have Josh next week as well. David, have a great weekend, my friend. Let's leave it there. Take care.
Great. Thanks, everyone. Take care.
Bye.